All right, everyone. Good afternoon. Welcome to today's webinar, How to Blend Fundamental Valuation with the Insights of Technical Analysis. My name is Jerry D'Ambrosio. Hope you guys are doing well. David's saving me from having to do a sound check, but you know what? I'll do it anyway. Quick sound check, guys, just to make sure you guys can hear me okay. I want to welcome everybody joining us via GoToMeeting. We have two kind of venues that we are delivering today's webinar to. GoToMeeting, of course, and YouTube. So welcome everybody joining us via YouTube and GoToMeeting. Looks like everybody can hear me okay. Fantastic. Welcome Ken, David. We are live, guys, from the Charlotte, North Carolina area. A beautiful day today, almost 70 degrees, partly sunny. I'll take that in the middle of February every year. We're supposed to be in the dog days of summer. We've had some pretty good weather down here in the southeast. Where are you joining us from? What's your name? Let me know where you're joining us from. How is the weather where you are today? Joseph says, okay, good to go. Hey, Gary. Gary, one of our swing trading coaching group members from Redondo Beach, California. I can think of some worse places to be. 60 degrees, Gary. Okay. Southern California. That's Southern California. Yep. On the cold side. Eric says hi from Boca Raton. Ohio, 70s, but 40 mile per hour winds, David says. Eddie from Houston, Texas. Bill from Ontario was sunny today. Northwest Ohio, low 60s. Camden, Arizona, Philip. Storms looming. All right, well, be careful. Bob from Dallas, 77 degrees. Michael says, Michael from Mars, a little chilly, but can bounce really well. All right, Glenn from Alberta, fantastic. Jonathan from New York City. So I said I'll take mid 70s in February every year. I grew up in New York, actually. Grew up in Long Island. I remember the cold winters, and that's one of the things I love about the South is that it gets warmer earlier and colder later. It doesn't stay cold very long. I remember spring really never begun in New York until like May. I remember some Memorial Day weekends where it was still really cold, but it's nice to have some mild weather here. Yep, Jack's not too far, 71 on the coast of Georgia. Awesome. Maui, 70 degrees. Fantastic, girl. Well, welcome everybody. Again, my name is Jerry D'Ambrosio. I'm the manager of educational content here with VectorVest. I want to introduce you to the guys and gals. This is our education team. I've been with VectorVest now 16 years, and when I first started, there was like one person in the education department, Steve Chappell, gentleman to my left. Maybe a few other folks, one or two, but it was a lot smaller department back then than it is now. Back then, we really focused primarily on the VectorVest program, making sure our subscribers understood what our indicators are, how to read the indicators, how to interpret the indicators, our market timing system, making sure everybody understood that, and just, of course, all the bells and whistles within the program, how to build watch lists, how to run searches, how to create portfolios and run back tests, things like that. Now we've evolved. I really like to think that we've come a long way and we've evolved over the years. We teach folks how to trade options now, how to manage retirement portfolios, swing trading strategies, and of course longer term, I wouldn't say buy and hold, but buy and hold for as long as you can. Of course, the exit criteria and market conditions are going to determine that. But, our successful investor group coaching does just that. It allows, for great education and, application to manage that type of portfolio. I do want to say that I have Ray Clark with me. Ray is the Vice President of Educational Services. He'll be in the background answering any questions that you have. I have a ton of content to cover here. So I'm not going to stop along the way too often because, again, I have a lot to cover, and I will save some time at the very end to answer some of the more common questions. And Ray, again, will be here to answer the questions that are coming in. So here's what you're going to learn today. You're going to learn the difference between fundamental investors and technical traders. And these two camps of investors have fundamentally different views and beliefs on what drives the market and what drives stock prices. Their basic belief in, those things are completely different. You're going to also learn. So in that first segment, what we're going to talk about are the actual things that those investors look for in determining when to buy and sell. We're then going to talk about how we merge the two, or the VectorVest method of merging the two. And this right here is not merging fundamental valuation and technical analysis is not a novel concept. We're not just making this up. Very successful traders and investors pay attention to both, and they incorporate both into every stock that they buy, whether it's a stock where their perspective and objective is much more longer term, or if it's a shorter term trade, they will pay attention to both the fundamentals and the technicals for every investment that they make. And then finally, we will talk about how to quickly and easily identify the best trades. So a lot of what we'll talk about up until that point is theory. You have to know visually what you're looking for. Now that could be on a chart, right? Visually what you're looking for in terms of price. And also, what do the fundamentals look like? All right? And that's all done very, very easily within the VectorVest program. Now, I think this will help. If you guys stick with me to the end, I will share with you a copy of today's slides. Just somebody remind me at the end. We'll be together for about an hour. So about 5:30 or so, as I'm wrapping up, say, hey, Jerry, don't forget the slides. And I'll put them in the handout section of your go-to meeting control panel. Okay? Just somebody remind me at the end. I do sometimes forget. So there are two different camps of investors, right? There's the fundamental analyst who really pays very close attention to the macroeconomic factors that drive the stock market. We feel the three main macroeconomic factors are earnings, interest rates, and inflation. In fact, we actually, if you're a VectorVest subscriber, you know this from our Friday Views last week, and that's our nightly newsletter, where we said we're currently in a case 3 bull market scenario, which, by the way, rarely happens. And that case 3 bull market scenario is because earnings and interest rates are rising, but inflation is falling. We determine rising or falling in earnings by an indicator called the ETI, the Earnings Trend Indicator. If I have time, I'll show you that later, but if not, it's in the VectorVest program. The value is currently at 1.02. If it goes below 1, that would mean that we're in a bear market scenario. That's how we determine really bull and bear markets, by the trend of corporate earnings. So that's really one of the things that a fundamental analyst will research. Earnings, inflation, interest rates. Based on those things, they then take a stance. Either I'm going to be bullish or bearish. How's the economy? What's the strength of the economy? Because the strength of the economy, the strength of the stock market is due to the individual stocks in that stock market, right? But first they take a 30,000-foot view of it to get a better idea of whether to be more bullish or more bearish overall. They'll also look at industry-wide financial strength. Now, the other analyst is the technical analysis, and we'll talk more about that type of a trader in a moment. But those three main factors there that are driving the market are a big focus for a fundamental analyst. They'll also look at industry-wide financial strength. Same indicators, but now on the entire industry. And of course, the underlying company's financial strength. Their earnings. Now, in the macroeconomic factor of earnings is corporate earnings, is the S&P 500 corporate earnings, and as a whole, how is it trending? Then they'll dive into individual companies, the underlying companies that they're interested in investing in. They'll look at their earnings, their liabilities, their revenues, their expenses, top and bottom line indicators. And that could become pretty overwhelming if you had to parse through all of that data. I'll show you how, of course, we make it much easier, and we take that data and we spit out useful, actionable indicators and information. But notice how I'm not talking about what a chart looks like. The fundamental analyst believes that these things are what's driving the stock's price and what's driving the market. The technical analysis is looking solely at price and volume. They are making buy and sell decisions based on attractive or unattractive situations of price and volume. Okay? That's it. They will use indicators. A technical trader has a much shorter term outlook. They'll use indicators to pinpoint buys and sells like the MACD or relative strength index or moving averages or Bollinger Bands. There's a ton of them. All of those indicators in one way or another are calculated off of price and volume. So, two completely different beliefs in what drives a stock's price, right? Technical analysis, it analyzes and forecasts the direction of price through past price data. So who's right? You get them both in a room. They'll argue with each other till they're blue in the face, and they truly believe they are correct. Right, and I agree, David. If I was in the room, I'd say, listen, guys, you're both right. Fundamental investors have success in the stock market. Technical traders have success in the stock market. Yes, it is a different perspective and a different belief in what drives the price of that individual or underlying stock and of the market, but they're both right in many ways. So what we want to do, and again, this is not a novel approach, we want to merge the two. The very best investors and traders, think about investing in anything, right? You want to get the best price. You're buying a house, you want to get the best price. You want to buy a car, you're trying to get the best price. When you're buying a stock, look, you want to get the best price, even though your perspective and objective might be longer term. Nothing worse than buying a stock at a high and watching it go down 5, 7, maybe 10% as soon as you buy it. It's a good company. You've done your research. The fundamentals are there. It may not have been the time to buy it. There might have been a falling volume. If you understand the relationship between price and volume and know that rising price on falling volume is not bullish, does not indicate a strengthening trend. So to dive into, the short-term likelihood of the stock's price rising or falling allows an investor to get a better price, to invest in a quality stock during an oversold situation. Okay, because even good stocks will pull back and enter into oversold situations. Now, let's talk about the different lenses that we're going to look through here today. Okay? The one lens is of the investor, right, who analyzes the fundamentals, determines if it's a stock that he or she wants to hold long term, then applies some technical indicators or moving averages or support and resistance or whatever to help pinpoint a better entry into that long-term holding. As opposed to just saying, hey, I analyzed the stock, let me just go buy it tomorrow. I don't care what price does. That's not how we maximize returns. Okay, so there's the one lens, right, of the investor that's looking to hold on to a stock for a long period of time, not in it yet, but is looking for a more attractive situation with price and volume to get a better entry. Then there is the fundamental, there's the long-term investor who has a stock in his or her portfolio that is a great company. For example, McKesson Corp. And this data here is taken from just a few days ago, February 7th. So Is this a stock that is suitable for an investor's portfolio, a long-term investor's portfolio? Well, let's take a look. The current price as of February 7th was $363 and change. We feel the company is currently worth $503.81. So wow, we're getting a bargain, right? So one of the things that a fundamental analyst does is they try to place a fair market value on the stock that they're analyzing. And how are they doing that? They're using all of that data that gets spit out, right? Earnings and liabilities and assets and debt to equity ratio and revenue growth and sales growth and earnings growth, right? They're taking all that, PE ratios, growth to PE. They're taking all of those indicators and they're trying to determine what the fair market value is, okay? They know what price the stock is trading at, but that doesn't give them really much information. Okay, based on the fundamentals, what is the current value? We assign a value. You don't have to go through any data. We assign a value based on all that data. We take that data. Remember, so I said earlier how VectorVest doesn't provide data. We provide information. We take data and we give you information. So the data that we collect and crunch spits out a value of $503.81. Great, good start. Relative value, relative safety. Those two indicators are fundamental indicators. A lot of the data that I talked about gets computed and indicators are created or values are created for these indicators. Relative value looks at the long-term upside potential over the next 1 to 3 years. So price appreciation potential over the next 1 to 3 years. Relative safety is an indicator of risk. It identifies or it tells us how risky or safe an investment is. Both of those indicators are on a 0 to 2 scale. They're both above 1, both considered favorable. Great. Fundamentals are there. The stock is undervalued, but right now it is falling in price. It has an RT rating of 0.86. That is considered unfavorable. The stock is in a short-term downtrend. Our VST is above 1. That's good as well. Here's some other fundamental data. And it currently has a hold rating, by the way. Earnings growth rate, GRT, 21% per year. Earnings per share, nice, $26, earning $26, nice 7% yield. PE ratio rather low compared to the average of the VectorVest database. There's growth to PE, pays a dividend as well. There is no reason that this stock shouldn't be considered for your long-term investment portfolio, right? This is what we talk about. These are the type of stocks that we want to have in our long-term portfolio. So here's a chart of it over the last 1 year. You can see the recommendation at the top. It's had nothing but a buy or a hold. It stayed above our stop price for the entire year. The stock goes from bottom left to upper right. The hard right edge, by the way, is not February 7th. It's October 4th. I'll explain why we're looking at October 4th as of the hard right edge there in a moment. But even as of October 4th, earnings per share, great trend there, bottom left to upper right. Relative value still favorable there at 1 point, looks like 3.1 or 3.2. Relative safety above 1. Earnings growth rate stepping higher, stepping higher at about 20%. Again, this is as of October 4th. No reason why, if you bought this a year or so ago, no reason why it still shouldn't be in your portfolio right now. And you might be saying, well, the market, right? You know, we've gotten some confirmed down signals over the last year. Then that's true, okay? What do we say? If you're a VectorVest subscriber, you know what we say or the type of guidance that we give when a confirmed down signal, that's a market signal. When a confirmed down signal is given, what do we say? We say, don't buy any more stocks during this confirmed down situation if you are a more conservative investor. We say, let your stop criteria take you out. A stop criteria that an investor might use is the sell rating, meaning, okay, I'm going to hold on to this sucker if it just keeps going up, even if the market's falling. But if it keeps rising, I'm going to stick with the investment. If it gets a sell rating anywhere along the way, I'll sell it. Okay. So October 4th, you're holding this position long, and you've had this in your portfolio for a while. Okay. So what can you do? Okay, what can you do to help maybe pad your account on the same stock that you're holding long term. That's where the technical analyst or the technical analysis comes in. You've done a really good job of identifying a fundamentally sound company, right? You're investing in the company. Your objective is long term. It has nothing but a hold or a buy rating. You have this stock in your long-term portfolio. But let's put our technical analyst lens on now. So as of October 4th, let's get rid of fundamentals for a moment. Let's just look strictly at price. As of the hard right edge, what do we see? Well, we see the stock kind of capitulate there over the last couple of weeks after that really nasty sell-off off of the August, September highs there, right? So we're basically just pulled off of a new 52-week high, and we find ourselves now in a what's called demand zone. It's a support level. Now it was resistance back here. One touch, two touches right at about 340. There's your third retest of that 340 zone, a little bit of a retest, and then a blast out above it. So it used to be resistance. Now it becomes support. And where do we find ourselves now? We find ourselves at that support level. And fortunate for our long-term investment, price didn't break down through that support level. It looks like it's holding. So if I want to, if I'm looking at it through a technical lens and I say, this might be an opportunity to make a really nice short-term gain here. I own the stock long. I don't plan on selling it until it gets a sell rating, but I'm seeing a favorable, attractive buying opportunity for the short term. Okay? Let's say you're not in the stock. Let's now put our technical lens on where we don't own the stock. We don't own the stock. The technical analyst is seeing price stabilizing here right at support and is looking for a nice retracement off of that support level. That same technical analyst, though, has recognized that this is a fundamentally sound company. Let's go back. And the likelihood that that support level holds and the likelihood of price kind of retracing from that level goes up when the fundamentals are solid. So the technical analyst does analyze the fundamentals and really only wants to trade favorable price and volume situations on fundamentally sound companies. It would make me feel much more confident about a short-term trade if I had solid, strong fundamentals backing it up. It's not to say that you can't make money on quality technical setups, on lower dollar stocks that maybe don't have the solid fundamentals. That's not where you want to kind of, hang your hat. Right, you want to stick to the fundamentally sound companies that are displaying attractive situations with price and volume. So the technical analyst sees both as well. The fundamental analyst and the buy and hold longer-term investor sees both as well. So what I look for here, and again, I know that it's a fundamentally sound company. I'm looking for a breakout. I'm looking for a breakout above a most recent high. Okay? And I'll use kind of just, I'll draw some lines on the chart to identify the most recent high. The next day there had a huge breakout. Huge breakout on some pretty good volume, almost 1 million shares traded, a little bit better volume there than over the last couple of days. But there's your technical breakout. There's your technical retracement off of that demand zone, off of that support level on really good volume. That's when you take the trade. Okay. Now, worst case scenario is if you don't trade the breakout day, you trade the stock the next day on confirmation. The stock went a little higher than the previous than that breakout candle's closed the next day. But the point is, you got a retracement off of support. I also added another indicator here, stochastics. It's a great indicator. So I talked about how the best time to buy growth stocks are during oversold situations. So not only do we have a support retracement, but we have the stochastics oscillator crossing from below 20 to above 20. That indicates That's your buy signal there. When stochastics goes below 20, by the way, stochastics just a very widely used oscillator, oscillates between 0 and 100. When it's below 20, that's considered oversold. When it's above 80, that's considered overbought. So look, let's say this was the hard right edge, right? You know, you're looking at the high there, and that's the hard right edge, and you're saying, "Wow, it's a great stock. It's rising in price," you know, and should be a very good investment long term, because remember, the RV value is really high. Price appreciation potential is well above 1. But short term, it was really overbought then. You wait for it. You wait for good stocks to enter into an oversold situation, and then you pounce. And that's exactly what happened there October 4th, October 5th. Now, this is a short-term trade. It's also a long-term investment, but it's managed differently, isn't it? What did we say? How would we manage a stock like McKesson Group Corp? How would we manage a stock like that if we wanted to hold on to it long-term? We use our sell rating, right? Price falls below the stop criteria. You'll see the rating at the top. It gets a sell rating. You close the position. It's not a trade. It's not a swing traders type stop. It's a stop that is designed to keep you in these solid, good stocks much, much longer. Now, if this was then a supplemental trade, you got to figure out when you're going to exit. That's always, you know, it's part of structuring the trade is determining when are you going to get out at a loss, when are you going to take profits. So really with a support retracement, it's pretty simple. It's the support level that I would use to cut my losses. Price moves significantly below that support level, I cut my loss. I also see an area of resistance right about 375 or so, right? It had a hard time. Didn't price have a hard time breaking above that zone? Well, if I'm in a short-term trade and price has a hard time again breaking above that same resistance zone, then you take profits off the table. Okay? You might be asking, well, okay, October 4th, great. It looked like a good setup, right? Let's go back. That looks like a good setup to me, right? Bouncing off of a demand zone, stochastics trending higher, crossing from below 20 to above 20. We know the stock is fundamentally sound. Looks like a great setup to me. Okay? What is the overall market doing? That'll trump the favorable stock setup that you have recognized. Well, on October 4th, the VVC has blasted off, completely blasted off of the October low. The MTI, the buy to sell ratio, both indicators, even on that blast off day, they were below 0.6 and 0.2 respectively. They were much lower at the low. So what am I talking about here? I'm talking about bottom fishing. I'm talking about a situation, a market situation where the VVC has gotten clobbered. The MTI and the buy to sell ratio go below 0.6 and below 0.2, and we look for a buying opportunity. We look for an explosive rally off of that situation to start buying stocks again. We got it. We got it in spades on October 4th. Huge rally that day. That primary wave up, green light in the price column of the color guard. Those are all buy signals letting you know that it's okay to buy stocks. Going back to our McKesson, MCK, here's now a chart from May of 2020 all the way to current. And I overlaid, what we're looking at here are the confirmed up and down signals, confirmed up and market calls on this chart. Only once, and was it once? No, you know what? With this stock, not one time did the price of the stock fall below our stop price. So if you would have bought this a few years ago, you'd still be in this investment today. Okay? So we had favorable market conditions on October 4th. Okay? We analyzed the stock, identified that it's a fundamentally sound company. We're looking at a really attractive price and volume situation where your stock is retracing off of supports, doing so on some pretty good volume. The stochastics oscillator also went from below 20 to above 20. That resistance level, but by the way, that resistance level, I still have the red line on the chart. I'll explain the quick test in a second, but that resistance level is the level at which I am going to look to take profits on my short-term investment, on my short-term trade, not my long-term investment. You have to separate the two because, again, both are managed differently. That is the area where if any hesitation or pause in that resistance zone occurs, I will take the profit off the table. We were fortunate here because price ran up to that resistance level and then blasted through it, and it did so on some pretty good volume there as well. Reason I have my line drawn from our entry to the right-hand edge is because that candle there would concern me. This hard right edge candle, that's called a shooting star. It's a bearish candlestick reversal signal. We're up 8%, 8.5%. The VVC is only up 0.5%. To put the 8.5% in perspective, that's 140% annualized. Okay? In other words, a very nice gain in a very short period of time. Now, there's the hard right edge there, the shooting star. The stock price continued to rise. Hey, look, let it run. Let your winners run. If the stock price is going to continue to run, you let it run. Now what's happening here, hard right edge, that's called a one black crow. So, with your long-term investment, guys, look, the management is a lot easier, isn't it? You're really looking at one thing. You're looking at is the recommendation a sell rating? If it's not, you're holding on to it. When you're trading and your your outlook is shorter term, there's a lot of different ways to manage trades. One of those ways is if you're fortunate enough to get an 8, 10, 12% gain in a very short period of time, and you bought off of a support retracement and the stock blasts through the next resistance level, you get into now an overbought situation, right? Clearly overbought. Price is just skyrocketing here. Kind of very similar to what it did here. What goes up is going to come down. So, swing traders, shorter term traders are going to look to capture gains off of these reversal signals. And that one black crow formation, by the way, I also put stochastics at the bottom because the one black crow, the bearish candlestick reversal signal in an overbought situation, is a strong reversal signal. What you need to see the next day is follow through, and we got follow through. I don't think you'd be disappointed at all buying here and selling here a couple of weeks later for a very short-term gain. Okay? And you can see the heavy volume that started to come in there as well, showing conviction of the change in direction. So let's look at the same stock now, hard right edge. Okay, here's where we exited. All right, the stock went up for a couple of days after that. I don't care. I don't need to squeeze out every last cent on every trade. But then it just fell off a cliff, and look at where it stopped. Look at where it stopped. You bought low, you sold high, you observed a reversal signal that, did take a couple of days to kind of play out, but you're in an overbought situation. You took your gains. You're not selling the stock in your long-term portfolio because it has not gotten a sell rating yet, but you see price crash, and guys, look at where it stopped. I mean, almost to the penny in November there, right at our support level, giving us another opportunity there in November. Okay? Retraced off of support, blew through resistance again, kind of established a little resistance level there. You take your trade off. Now, the stock has moved sideways, hasn't really gone anywhere since, but let's look at the hard right edge. What do I see here? Well, this is today, I think, or yesterday. Hard right edge is yesterday. I'm not seeing a buying opportunity right now. What I would love to see is price fall back towards and settle back into that support level and retrace from it, I like that opportunity. I like that buying level. If that doesn't happen and price breaks out through resistance, I like that as well. Your long-term holding, how's it doing? Well, it's not doing so great, right? It's moving the stock price is moving sideways. Your long-term gains there, your long-term holding, the gains aren't there. But what you're doing is you're taking advantage of a channeling stock or a stock that is stabilizing quite often in these supply and demand zones. Okay, let's look at another example. February 7th, same date, United Health Group. No reason why this stock shouldn't be in your long-term portfolio either. If it's not, you might consider it, right? Price is $492.83. We think it's worth $509.84. So it's fully valued. Relative value, really strong, 1.33. Relative safety, really strong, 1.39. However, the short-term trend is unfavorable right now. The RT rating is at 0.84. It's still got a good VST of 1.19. Earnings growth rate at 17%. Earnings yield at 5%. PE ratio a little under 20, so that's relatively low compared to the average. It pays a dividend as well. Again, this is your fundamental analysis. This is your fundamental analysis. On any stock in the VectorVest database, you can determine whether it should be a long-term core holding or not. Here, with the indicators at the levels that they are, I'm going to say, sure, if it's not a long-term holding in your portfolio, it should be. But it's a hold rating right now with an unfavorable RT rating. Here's what the chart looks like now. So I'm really not seeing right now an attractive price situation. We'll look at the technicals in a moment, but let's just kind of look at, as of the hard right edge here, here are our indicators. We looked at them on the spreadsheet just a slide ago, but here are the indicators. Strong earnings per share, good RV, good RS, good earnings growth rate. Okay, no denying that it's not a fundamentally sound company. Right now, let's look at the hard right edge first. All right. Here's your support level, and here's your resistance level. Even though this might be a long-term holding, price is a little bit below the current resistance level, which makes me hesitate on taking this trade now. Okay? I'd put this in a watch list. If price breaks above this resistance level, there's your buying opportunity. If price happens to fall back to the support level, there's another buying opportunity for you. But let's take a look. With the previous stock, MCK, we looked really kind of with a magnifying glass at a few different buying areas, right? Let's just take a look, a 30,000-foot view here. You have a resistance breakout there on April 15, 2021. You had a really strong resistance level. 1 touch, 2 touches, 3 touches before the breakout. Okay? I'm just going to go back. Sorry. Right in that area, right? Let's just take a look at where the breakout occurred. Look at the earnings per share there. It had been rising, really solid. Relative value, well above 1. Relative safety, well above 1. Earnings growth rate, in positive territory, we're looking right about maybe 14% or so. And that's on the breakout. So you're still analyzing the fundamentals, but you've now recognized a really nice price situation where if you if you hadn't owned the stock or you don't own the stock, there's your buying opportunity for your long-term investment. Okay? Good opportunity there. Price rallied, made a new high, came back down. Look at where it stopped. Stochastics went below 20. So a support retracement with a stochastics crossing from below 20 to above 20, great buying area. There was another buying area. Stochastics went below 20 and also price retraced from support again. Here is where you had price break out through resistance in that area, right? Came back down, retest. Guys, it's not a coincidence that price starts and stops at the same levels. It's not a coincidence. This is what traders look at. They are looking at these zones and these what they call demand zones, that's support, supply zones, that's resistance, and they really pay very close attention to price action in those zones. It's not a coincidence. So here you get the breakout above resistance, and you get the retest, which tends to happen. Okay, now we're in another zone, right? We broke out of this supply and demand zone, and we've entered into another one, seemingly at higher prices. But now our job as technical traders is to identify those new support zones that used to be resistance and take advantage of the retracements off of them. Okay? Notice the recommendation or the rating at the top. There's no reason, and I wouldn't even say that market conditions are a reason. Market conditions can sometimes be the reason why you exit a position, but it's because the stock price gets a sell rating. Again, we're talking long-term holdings now. It's because market conditions are so brutal that they've kind of, caused the stock to get that sell rating, and that's when you get rid of any position. Last line in the sand, I don't care if you want to hold on to it for 10 years. If it gets a sell rating, you'll always get an opportunity to buy it back, but if it gets a sell rating, you have no idea how long it's going to continue to fall for. But not once here, actually once, I have to say once, right there for it looks like what it was a day that it got a sell rating there. Okay? But there's no, other than that, you're buying this, you're holding it long term, and you are padding your account, supplementing your longer term gains with shorter term gains. And you can just keep going. Pay attention to those support and resistance levels. What's happened recently now, price broke down through this support level, which it held once, twice, 3 times, 4 times, and then it was it. It was it. Buyers couldn't hold that level, and the price broke down through. Look at where it stopped. Look at where it stopped, right in that same lower demand zone. Now, that was intraday, and smart money got in right in that zone, didn't they? Right? Price crashed all the way down to that support level right below 450. Smart money got in, and they're heroes. But right now, what am I looking at? I'm looking at price, hard right edge now. Price is above support but below resistance. Not a buying zone for me right now. If price breaks above this resistance level on good volume, I like that. I like that buying level. If it falls back down to support and retraces from it, I like that as well. Okay? So the question is now, how am I going to find my trades? How am I going to find my trades? Okay, you learn a lot about theory. You understand what relative value, you're looking for a stock where relative value needs to be. We want it to be above 1. We want that long-term price appreciation potential. We want relative safety to be above 1. We want the stocks to be a safe investment and a safe trade, therefore. Right? We want solid earnings growth rate. I feel like I have to sneeze. Sorry, guys. Solid earnings growth rate. Company pays a dividend, even better. Right? Companies that pay a dividend, usually have positive earnings. Can't afford to pay out dividends if they don't have positive earnings. So even better if it pays a dividend. There are a couple of ways to find trades. We've learned theory so far. I explained where the we want to favor undervalued stocks. We want to favor stocks whose price is currently below where we value the company at. We want high RV ratings. We want high RS ratings. We want those fundamentals there. Michael make his comment, lots of technical discussion, but kind of light on fundamental discussion. I wouldn't say that. I wouldn't say we're light on the fundamental discussion. The fundamental analysis in VectorVest is, guys, it's easy. It's easy. RV above 1, RS above 1. GRT, earnings growth rate, larger than the sum of interest and inflation, great. Earnings per share, good. You look at the charts, you see the trends of those indicators. That's kind of the easy part. To take out the magnifying glass and looking at short-term price behavior, that's kind of where your time is spent. Okay. Relative timing, Eddie stands for, or RT stands for relative timing. It measures short-term price trend. So there's the first method in finding investments and finding trades is what we call the one-by-one method. That's when you just look through lists of stocks. You know what you're looking for, but you got to go through the legwork and looking through a list. That's not my preferred method. I don't do it that way. It's possible. I like using a scan. Within the VectorVest Premium program, we have a tool called ProTrader. It's a technical analysis scanning tool. It allows you to scan for a lot of different technical indicators. Stochastics, moving averages, support and resistance, RSI, Bollinger Bands, envelopes, ADX, a lot of different technical indicators. So this is an example of a search that or search that you might consider. The Unisearch tool, forget about ProTrader. The Unisearch tool is just a fantastic search engine because it'll search through the entire 9,000 plus stock database to find stocks that meet certain criteria. So if we know that we're looking for a fundamentally good company, we know the indicators. We know we want growth rate to be favorable. Again, the current sum of interest and inflation right now is what, 6, and it's about 5. Maybe 10 to 12%, right? Inflation's around 6.5. Interest rates are in the mid 4s right now, or 5. So we're looking at an interest and inflation sum right about between 10 and 12%. Well, here with prudent performers, we're looking for a growth rate of greater than 15%, which is good. You want these stocks' earnings growth rate to be higher, to be greater than the current sum of interest and inflation, and we're there with GRT. Good. We want the relative safety to be above 1.15. We want relative value to be above 1.25. So we know that the fundamentals are there just by those two indicators being above those levels. We're sorting by VST, so that's going to bring the stocks with the best combination of value, safety, and timing up at the top. But look at the last parameter. Look at the last parameter. It looks for the stochastics oscillator. Talked about stochastics, right? What's your buy signal with stochastics? It's when it goes from below 20 to above 20, and that is what this one-line parameter does. It finds stocks whose stochastics has just crossed above 20 in the past day. And I ran this search as of yesterday. I got 2 stocks. I got 2 candidates. Okay, you might not find, you might have to tweak the search a little bit, or, there's other indicators to use. But this is just an example. Here, AEHR, hard right edge. Do you think that looks like a good buying opportunity? Right? Stock is just pulling off of a new high, new 52-week high. It has a buy rating. It also, when I put CI down at the bottom, Comfort Index is another VectorVest proprietary indicator in that it looks at the stock's long-term price trend. RT looks at the short-term price trend. CI looks at the long-term price trend. It's also on a 0 to 2 scale. When it's above 1, that's good. Below 1 is bad. Here we have a CI of almost 1.6, which is excellent. A high CI of 1.6 means the stock, and look how it just has recently crossed from below 1 to above 1. What that means is the stock is beginning to show the ability to withstand, long or lengthy pullbacks. It's now developing into a higher high, higher low type trend. But the short-term price action has not been favorable recently. Here, the stochastics oscillator not too long ago was above 80. The stock pulled back. The stochastics oscillator, we found, as of yesterday, the stochastics oscillator has just crossed from below 20 to above 20. Do you think that's a good, not only short-term trade, but entry into a longer-term investment? Why is it a longer-term investment? Why should I consider it to be a longer-term investment? Because the indicators The fundamental indicators are favorable. Let me go into the program here real quick, because I could just go ahead and run that search and just show you what the values are. Okay, so here AEHR, it's a little overvalued. Price is at 33.78. We value it at 21. But look at the fundamentals. Look at RV. That's a tremendous long-term upside appreciation potential. It's a very safe investment, and it's also in a strong uptrend, 1.87 RT. But you're saying, well, how can it be a 1.87 RT and the stock has just fallen off of a new high? That's how strong the trend is. That's how strong the trend is. For the stock to pull back like that and the RT indicator to stay well above 1, it just means, look, basically, you can picture it this way. You're driving down the highway and you're going 80. Your RT is at 1.95. You let your foot off the gas a little bit. You're still going 60, but now the RT has dropped to, let's say, 1.8 or so. You're still going 60. You're still going fast. The trend is still strong. It's just going through a little short-term corrective period, little oversold price situation within a very strong trend. Folks, that is a buying opportunity if I've ever seen one. That's what pros do. That's what the very best successful traders do. They find these oversold opportunities in long-term uptrends. Here's VRTX. I mean, here's your one-year chart, bottom left to upper right. There's your CI. It first crossed above 1 back in June. It's at a really nice level of 1.2. This stock, VRTX, is undervalued. Price is 300. We value it at 372. Look at the RV. Look at the RS. Keep scrolling over. Earnings growth rate, earnings yield. Neither of these companies pay a dividend. That's just their prerogative. They have the earnings to do it. They just don't. But the fundamentals are still strong. Okay? And look at the buying opportunity here. Hard right edge, guys, just February 14th. Okay? Stochastics had crossed from below 20 to above 20. Look at the last couple of times here when stochastics crossed from below 20 to above 20. Below 20 to above 20. Below 20 to above 20. Time and time again. And this is what the technical analyst believes is driving the price. Future price action. And that's what indicators are for. But again, I know I'm talking about technicals, guys, but I wouldn't be talking about it if the fundamentals weren't there. And we're meshing the two together. And I've only shown you one technique. Okay? Using stochastics and support and resistance, I guess two. There are so many different ways to identify attractive buy and sell signals, short-term buy and sell signals on fundamentally sound companies. There's a ton of different ways to do it. So if you're sitting there and you're saying, well, maybe this is the missing link. This is what I've been missing. How can I take my trading or my game now to the next level? You have a choice. You could do nothing. That's always an option, right? You could do it by yourself, maybe take bits and pieces of what I kind of talked you guys through today, or you can let us show you. Okay, and I'm big on giving answers away, and I'd love to do that for you guys. And really, that's why we got together, and we put together a brand new course. This is an all new course, never before delivered, called Uncovering Trends, Technical Analysis the Easy Way. So let's talk about everything that you'll get during this course. Guys, stick around with me. I'm going to talk a lot more about the course and all that's involved here. But let's talk about what you get. You get 6 training modules. You get all the videos, the slides, graph resource tutorials that I've recorded and uploaded into the university. 1 year access to all the material within the university. The 6 training modules are pre-recorded. But we are going to meet live 6 times. We're going to do 6 live mastery support sessions. We'll be there to guide you every step of the way. We go over the contents of each module and look at the real market on these session dates. You also have private dedicated email support as well. If you don't already have VectorVest Premium, we're going to give it to you for 70 days. VectorVest Premium includes the Pro Trader technical searches. That's going to come in real handy during this course and afterwards in finding trades. Finding trades. Okay? I'm also going to invite you to 6 swing trading coaching group sessions for the duration of the course. Your first session, your first invitation will be on March 2nd. Those are Thursday. That's a Thursday. We meet every Thursday. Myself and Steve Chappell help you manage a swing trading portfolio in this coaching group. We teach a lot of courses here. Trade Like a Pro, a lot of swing trading courses. Trade Like a Pro, precision swing trading, mastering moving averages. A lot of those, those courses we teach in theory. Here's the strategy. Here's the scan if necessary or if we have one. Here's what you're supposed to look at. In this swing trading coaching group, we implement those techniques. We wouldn't teach you those techniques. We wouldn't offer these courses, guys, if we didn't believe the techniques work. In the swing trading coaching group, we implement with real money the strategies that we teach in various courses. So we're going to invite you guys to 6 live 6 live swing trading coaching group sessions. So here's what comes with the course. 6 modules, 60 plus lessons, folks. 60 plus lessons. 6 live mastery support sessions. By the way, the 6 pre-recorded modules will be dripped out, will be leaked out 1 module at a time, 1 week at a time, beginning a week from today, February 22nd. So when you register for the course, I'll talk about how to register for it in a moment, but when you register for the course, you'll get access to the university course immediately, but you won't see any content there other than the graph resource videos that I recorded and uploaded. Those are just some, hey, here's how to draw lines and how to create layouts and how to add indicators and add moving averages. All that's, all that navigation, graph navigation and graph manipulation stuff that we don't spend too much time on in the course. We want to really teach you the, the application and implementation of these techniques and these systems. We don't want to waste a lot of time with navigation. But if you don't know how to manipulate charts thoroughly, those videos will help. That's the only content that you'll see there. We're also going to do 6 live mastery support sessions. I'll go through the dates of those in a moment. 70 days access to VectorVest Premium. You get 1 year access to the digital course and also the swing trading coaching group, 6 sessions during the duration of the course. Now, the course is valued at $1,990. The early bird rate is available of $1,495. But guys, I want to just slash that almost in half and offer you the registration rate of $895. That is the best rate that we are going to offer for this course, and it's really only good for you folks. Now, I want to give the folks at home who are watching this recording right now, and we are recording this session. Folks are going to get the recording. If they couldn't make it here, they'll get the recording later. I want to give them an opportunity to get the $895 rate, so I'm going to leave this rate available only for the next day or so. Okay? I know it says order before the end of the webinar, but you have a day. Again, I want to give those folks watching the recording an opportunity. And I believe, thank you, Ray. Ray typed in the address, guys, that you see at the bottom, vectorvest.com/trends. By the way, this is 100% money back guaranteed. If after the course is over, you say, you know what, I didn't learn anything. I'm not going to use any of this stuff. I want my money back. We'll gladly give you the refund. Okay, so when are the sessions? When are the live sessions? And what if you miss one? If you miss one, no problem. They are recorded. They're uploaded into the university within 24 hours of when we deliver it. Our first live mastery support session is on Wednesday, March 1st. That is 2 weeks from today. Remember, 1 week from today, February 22nd, is when we're going to release the first module. You'll have a full week to digest and watch that first module before our first mastery session on March 1st. March 2nd is when we release the second module, and our second mastery session is on March 8th, so on and so forth. Those are Wednesdays, and the sessions will begin at 1 p.m. So let's talk about the modules. Module number 1. By the way, myself, Stan Heller, those of you that are from Canada know Stan very well. Dr. David Paul. If you don't know Dr. David Paul, boy, you're missing out. and Ron Wheeler, guys. Ron Wheeler. Ron is our manager of options trading here at VectorVest. He does mostly options courses, but we're really happy to have him for for our technical analysis course. So you have 4 of us. You have 4 instructors. The elite rate, Steve, is $8.95 right now. So if you're an elite subscriber, you will pay $8.95. Now the normal elite rate is $9.95. That's half off the regular price of $19.90. But for everybody, we want to give everybody the best rate possible during these webinars. So if you're elite, you register now, you get $8.95. If you're elite, if you register 2 days from now, you'll pay $9.95. Okay. But here are the modules. Difference between fundamental and technical analysis. We'll talk more about that. Our VectorVest fundamental and technical indicators. We'll have videos for each indicator, and we'll talk about the importance of market direction as well. Module number 2, the importance of price structure and volume analysis. Every technical indicator is based on price and volume. So we talk about price first and the different ways to view price, trending, neutral, and extreme type of market environments, and the importance of volume. Okay. And in module number 3, I will be delivering the entire module, okay? All about candlestick analysis. I love candlestick trading. Bullish and bearish candlestick patterns. Coupling those or marrying those patterns to Western indicators like support and resistance and moving averages and stochastics, okay? Module number 4, this is really the meat of the course right here. The most profitable indicators and oscillators, and there are dozens of them, and we include about 12 to 15 different types of technical analysis indicators. Moving averages, MACD, Bollinger Bands, stochastics, RSI, ADX. We'll talk about Fibonacci retracements and bullish and bearish divergences. Module number 5, trade management and psychology, and then module number 6, the VectorVest Advantage, where we just bring everything together and leave you guys with a successful plan moving forward. So Jack is saying, hey, what about the slides? Well, what I did was I put them in your handout section of your GoToMeeting control panel. You guys should see them there. It says Uncovering Trends Webinar. It should say February 2023, and it is a PDF. Okay? It is a PDF. Okay? All right, guys. Thank you, Ray, man. I really appreciate it. Ray stuck around here and answered all your questions, guys. I really appreciate it. I'm going to stick around for a few more minutes. If you have any other questions, remember, go to VectorVest.com/trends. Hey, listen, if you're in, type in "I'm in the chat box. I like to always kind of get familiar with future students. Remember, when you register, you're going to get an email with all the information you need to access the course, and all your mastery support session dates will be on there as well. Okay? All right. Any questions at all, guys? Any questions at all? Michael says, when will VV update its platform to use technical trading indicators? Such as what, Michael? We have a lot of different technical indicators in the program. Jerry says, coming, just need to work out which card to put it on. Fantastic, Jerry. Awesome. Welcome aboard. Remember, we start in a couple weeks. I'll remember your name. My name is Jerry. How could I forget? So VectorVest.com/trends, guys. You'll only see that $8.95 rate there available for a very short period of time. Those folks watching this at home, I want to give them an opportunity to register for the $8.95 rate. But that's the lowest rate that we'll offer for this course. Okay. All right. And Steve says, when will the $8.95 go away? In a few days. In a few days. Gerald says, do you cover more searches to find trading ideas? We will. We will cover more searches. More so the searches, it's guys, the indicators, right? Once you get to the end of the course and you understand what you're looking for, the scanning becomes really, really simple. We spend a lot of time in the searches prudent folder because those are the fundamentally really better searches. Then we take those searches and we include technical indicators to again pinpoint better buying opportunities. So yeah, we'll definitely cover more searches for sure. All right, fantastic, guys. Look forward to working with each and every one of you. Hopefully, you guys register www.vectorvest.com/trends. I really feel this is so important to be able to blend the two. Increases your probability to become a consistently successful investor and trader. If you're a long-term investor, you want to maximize returns by finding the best buying opportunities, and a lot of times the best buying opportunities on those fundamentally sound growth stocks are in oversold situations. And if you're a trader, it gives me much more confidence in a short-term trade if I have all those fundamentals behind me. Okay, so I really think meshing the two and blending the two is really important. All right, Jerry says the 1 p.m. live class is a little bit early for me, but I'd be willing to make the adjustment. All right, Jerry. Fantastic. All right, guys, we'll look forward to working with you. Have a great rest of your day. It's Wednesday. Tomorrow's Thursday. Got a couple more days left in a trading week. Looks like the market wants to move higher for here. We got some green lights in the color guard, so looks like our market perspective is bullish again. It was kind of neutral there to bearish for a little while when the market kind of softened, but looks like we're resuming the uptrend. Hopefully that continues. Take care, everybody. We'll see everybody soon.